All right, everybody, welcome back to TCP Trading Camp Pod for episode 66, arguably our biggest episode ever. I'm very, very excited to have tonight's guest on the podcast. Before we bring him in, know what's going on.
Alejandro, it's good. Like you mentioned, super excited to get Peter on. We've been trying to nail this one for a little while now, and so I'm glad we were finally able to get him on the pod. It's going to be exciting.
All right, the man, the myth, the legend, Peter Tuchman. Welcome to the show.
What's up? What's up, guys? We're thrilled to be here, guys. Thank you for having me.
This is going to be a lot of fun, Peter. So I'm sure that Noah would agree with me when I say this is kind of a crazy thing to be happening for us. I mean, we started the podcast a little over a year ago. Noah and I, throughout college, we were getting into stocks, getting into finance, and without really knowing it or knowing exactly who you were, I mean, your face is plastered everywhere. When you look up New York Stock Exchange trader, floor trader, Wall Street, it's you. It's you. And to now having the chance to speak with you, to get to know you and having us on our podcast is awesome. And it's a privilege. So thank you for joining us.
My pleasure. Look, it's really important to me. It's my responsibility. I feel strongly about it that you guys are a little bit younger than me, and stocks in Wall Street are a big deal for you. And so to be able to connect with me and for me to be able to share my experience with you, I mean, that's where I'm at right now. For me, that's the most important thing. I feel really strongly about it being my responsibility that you guys are the next generation of the investing and trading community. And a lot of people in my position are not on social media, are not embracing younger people who are excited, are passionate about it as we were when we started. And so I feel strongly about it. So I'm really glad you guys hunted me down and got me on.
Yeah, that's something that I definitely noticed. And you mentioned a lot of people in your position or your age who have been doing this thing for a much longer time than we have, especially during the COVID market when people our age started making a lot of money. The OGs were kind of like, oh, these new guys, like they don't know what they're doing, like they're all going to get smoked. But I really do appreciate you saying that you understand where we're coming from. We're excited to learn. We're excited to dive into the markets. You're on Twitter. You're going back and forth with the younger generation, and that's awesome. And it shows a lot about your character as well. And I think that it's extremely powerful for somebody in your position to, I guess, kind of reach down and say, you know what, like I can see the passion. I see that you guys are interested. Let's kind of do things the right way, because there's not much guidance. And again, the older generation, especially during the COVID market and with the memes and stuff, almost became like the enemy. But I've gone through your Twitter, and your Instagram following is huge as well. And you're on board with everybody. You make it fun, man. You make it really fun. I love it. I love what you're doing.
You know what? Look, you know what? It's really, I mean, I'm not really sure when I made the transition. I've always been, I love what I do. And and for me, I'm a little aged out. I'm not old, but I'm a little aged out of Instagram and whatnot. But when I found social media and I found this, and then, it all sort of, I call it like the perfect storm. So I got on social media, I became sort of well-known all over the world with my face at first. And then it sort of started with me talking about my view and my outlook on the market. And then I started seeing this incredible following from young people all over the world. I mean, I have a huge global footprint. My TikToks have gone into 30, 40 million views. And we did a really fun project, which I'm going to continue to do, called Einstein's Elementary on TikTok. Just sort of man on the street, like ranting and raving out on, talking about markets, talking about what inspires me, talking about Wall Street. But for me, it's an access game, right? I mean, I've been amazingly blessed to have found a platform on social media. It's hard work, right? I mean, I do this all the time, but for me, it's not really work. It's something I love to do. And then sort of COVID came along, and I just saw I was really keyed into what was going on. I was on the floor trading. I traded the meme stocks. I was in GameStop, when we stopped trading at 29 times. I was already involved with the with Wall Street Bets, right? Because originally they came to me and wanted to sort of talk to me, as sort of the new D-Gen phenomenon. And at first I wasn't really clear about their motivation. And, obviously it was sort of eyes on, the younger generation. I mean, I know Jamie Rogozinski, I know the originators of the bets, but the young D-Gens that came along that are part of that Wall Street Bets community and Wall Street memes community. At first I was not clear of their motivation, and sort of I was looked upon as the enemy. And then I sort of thought about it for a while, and I said, how cool would it be if this is a phenomenon. This is not a flash in the pan. This new generation, I do call it a phenomenon of young. You have to realize for 100 years, the barriers to entry for anybody except super rich people to get into the stock market was the norm, right? You had to be an accredited investor, right? And that means that all the money you put in the stock market, you had to prove that if you lost all of it, it would have no effect on your standard of living for 5 years. Well, nobody but really rich people can really say that. So that sort of kept most people out of the market. And there were no platforms like what came along as the Weebles and the Robin Hoods and whatnot. So when COVID came along, and I saw this massive influx of 40 million plus new retail traders come into the marketplace, happened because it went from barriers to entry to anybody with $10 and an iPhone could buy fucking one share of GameStop at $3. And I said, okay, well, I can be sort of on the outskirts of this, looking in, or it's my responsibility. And I feel that really strongly, that holy shit, yes, these guys are cowboys and Indians. They've suddenly, I use that really fun analogy, in my opinion, because I do have a really young mind, and I've had a lot of fun in my life. But it's like, you guys were never invited to the party, right? And then suddenly you were all invited to the party, and you weren't given any of the warnings. You weren't told that if you drank 12 shots of vodka, and did a couple of hits of Molly, and you were going to end up out on a corner getting all sick and drunk and blame the funny old man in the suit, right? Or you could come to the party, learn the rules of the game, and actually have some longevity and have an effect on it. So I felt there was really what a fun opportunity and a responsible opportunity to sort of curate the next generation of traders, because otherwise you will all be, and a lot of people have, sort of cowboys and Indians running rampage over a bunch of things, and that's fun for a little while. But at the end of the day, more people lost money in this rampage since COVID than made money, right? There are a few people who got away with a couple $1 million, but I would say a majority, 8 out of 10 day traders are not successful in this. 8 out of 10 day traders blow up their trading accounts. And I know for a fact, because I'm a forensic analyst of the meme stocks, that's what I do for fun. I know that 9 out of 10 people who traded them lost money in them, right? I mean, I run a trading academy with my partner, David Green. I get 1,000 emails a day of people who are still stuck in GameStop at 300, AMC at 72, Best Buy at 33. I know the game, right? So I have my finger on the pulse. And I know that more people lost money than made money, right? If this was just a get rich quick scheme and everything, markets did nothing but go up and it was all fun and good, well, that's great. I want everyone to be successful. That, for me, that's cool, right? I don't need to die with the most toys. That doesn't really do much for me. I'm a believer in, I'm a team player. I want everybody to find Wall Street and find trading and investing, because it's the greatest fucking thing in the world. It's so exciting. The branding and marketing point. We're the greatest consumer generation in the world. You guys are. We were before you. And we're very loyal customers, and everything we use are public companies. So you guys know all about friggin' Wall Street. You know everything about it. You probably know more about it than me, about what's hot and what's not. Young people, I talk at colleges all over the world. I travel around the world doing motivational speaking. I have a trading academy. I do coaching and mentoring for young traders. I have 5 different TV shows. I've got, I'm about to launch a new one called Money News Network with Nicole Lapin. I mean, my life is basically, and I do AMAs on Wall Street bulls, degenerate degens, so-called degens, to talking to thousands of people. So, I know that when young people will ask me, what what stock would I recommend to invest? And I can't be your advisor, and I don't recommend stocks. Disclaimer, disclaimer. I would just say walk down the street or go to school, talk to your friends and see what computer everybody's on, what phone they're using, what they do in their spare time, what social media they're on, what sneakers they wear, and what they like to, what sports they're into. And then you'll notice, and where they shop. And then you will see what's a good buy, what's a good stock to get involved in. Companies that make money, companies that support the consumer and that are loyal, and so you guys are really friggin' smart, and you are amazing. I'm speaking of young people who have found the passion of Wall Street, right? And enough to make a podcast and enough to try and trade the market. And so it's my responsibility as someone who's been around for 100 friggin' years, to share what I know, to share the bumps in the road, to share the headwinds and the obstacles, to let you know this isn't a get rich quick scheme, right? That that you're more prone to lose money than make money. And those people who are making money and posting pictures of their Bugattis and $10,000 stacks of money on Instagram are actually not. That's all horse shit. And I know it because they all call me and beg me to help them get out of the shitty trades they got in.
You have Bugattis, Peter?
What?
How many Bugattis do you have?
I don't have any Bugattis, and as opposed to what I believe recently it was put out on I don't know, one of the social medias that I'm worth $1.5 billion. That is an erroneous fact. I don't have 1.5 billion. I have 1.5 million, and but I'm a rich guy. I'm a rich guy because I'm doing what I'm doing. I love it. Right.
Let's talk about it. I want to know, Peter, about your background, your trading background, how you got involved on Wall Street from the start, from 100 years ago, as you said.
Okay, cool. Well, I went to high school with Alexander Hamilton. He's dead. He's buried across the street at the stock exchange. We started the Federal Reserve Bank together with George Washington. My road was not directly one trajectory to Wall Street. I grew up in Manhattan. My parents are Holocaust survivors. My dad was a doctor. My mom worked with him. During high school, I was a bit of a hustler. I was a wheeler dealer. I don't need to say much more than that. I ended up going to went to public school as a kid, and then education was a big thing for my parents because they had Eastern European backgrounds. And so that was really important. And when public schools in the 70s in New York got a little bit fugazi, they put me in a private school. And I went to Riverdale Country School. If you don't know it, it's sort of a fancy billionaire club. At least it is now. It wasn't then. And it's where the Kennedys went to school. And it was a really super duper private school. And I got an incredible education. But I was a little bit on the fringe. I was doing some wild and crazy shit. I graduated college. I graduated high school. I went to UMass Amherst. I studied agriculture. I wanted to be a farmer for some crazy reason, which we don't need to discuss. Probably growing shit that you can buy legally on the street right now. But we don't need to get into that story any further. Anyway, I got a degree in agriculture. And then I have an older brother, much older brother, who my father adopted during the war. His parents had been murdered, and my dad brought him up through the concentration camps, came to America, and a long story short, he became a very wealthy Wall Street takeover tycoon, and he's now 93 years old. And he said, you gotta get some Wall Street in you. I know we were very close, even though he's much older than I am. So that was sort of my inroad into business. He said, you know what, I need you to get a degree. If you get a degree in finance and business, you and I can do some business later. And by that point, he owned oil companies all over the world. He was big on Wall Street and whatnot, and a big mentor to me. We were really very close. And so I ended up getting a degree in international business finance from UMass. I graduated college in 1980. I moved back to New York. I was trading commodities then. I'd gotten some money from him, and I fell in love with commodities. And back then, there were no computers. So we used to use the Wall Street Journal, and they would print up in the journal, would have the pages of where the commodity prices were. And I was really good with numbers. And I have a bit of a spectrum in brain, so I can analyze numbers in groups that make sense. So I started trading commodities, and I turned about $3,000 into about $45,000 over about four months. And then I lost it all in one day. I lost from 45 grand in 3 days right down to $800. By the end of it, I was trading potato and lumber futures. But anyway, I ended up opening up a record store in sort of a crazy midnight epiphany. I opened up a record store on Bleecker Street in New York City. It was a jazz record store and an art gallery. I was the doorman at Studio 54 for 2 years. I sat out front Studio 54 wearing a full Arab keffiyeh in a white Rolls Royce, letting people in the front door. So I had that kind of crazy time. I was hanging out with some of the wild and woolly people of the 80s. And then in 1982, I closed my record store. And New York was a little bit wild then. And I have to admit, I was a bit wild. I was still a kid, right? I was in my 20s. And it was time for me to get out of town. So I ended up moving to West Africa. I had a friend who ran an oil company in the People's Republic of Benin in West Africa. And I needed to get out of town. We don't need to discuss that. And so I went there and I lived there for 2 years. And I ran the accounting. That was just the beginning of computers. So you have to realize there was a time before computers, cell phones, and all this crazy shit. And so it was 1983. Computers were just starting. There was a thing called Lotus 123. It was the first spreadsheet. It was like a simple spreadsheet computer where you would just have a spreadsheet and you could type shit in and mix and match graphs. And so I ended up running the computer for this Norwegian oil company. I stayed for about a year and a half. Got really into numbers, got into some business, and then I was 27 years old. It was time to come back to town and grow up. And so I came back to New York on May 23rd, 1985. My father, who was a well-known doctor in New York, and my older brother decided I better get down to Wall Street. They felt that it was a perfect I have a bit of a boisterous, loud, obnoxious, fun personality. I've always had that. And my older brother thought that the floor of the stock exchange would probably be a great place for me to work. And my father had a patient who was a market maker for AT&T at the time. And so I ended up going down there and I got a summer job as a teletypist. Teletypist back in the day when stocks were transacted in open outcry, right? And buyers and sellers would trade stock. And then it was all being done on paper. I think I may even have a couple of pads here around. Then the stock would come back to the clerk. The clerk would report it over the phone to the portfolio managers up on the desk. And then he would hand the piece of paper to a teletypist who would input the information. Who bought? I bought 100,000 shares of IBM at $123. I am Goldman Sachs. I bought them from Bear Stearns, badge 588. And that information, it was actually the original blockchain, right? It was the ledger that identify every trade, 1,000 shares, 100 shares, 100,000 shares trade. And that information would go upstairs. And that was my first job. And the floor of the exchange, you guys are going to come visit. It's not what it was back then. It was open outcry. There were 10,000 people on the floor, 1,600 brokers, clerks, market makers, reporters, squads. There was a huge support staff, supervisors, governors, and the adrenaline and the action in the room was wild. For me, I thrive on chaos, right? I that's when I'm settled down, is when the shit around me is completely crazy. And so I knew it was the place for me the minute I walked on that floor, right? It was the heartland of what we call an auction market in open outcry, like you've seen in the movies, whether it's Trading Places, which is not actually the NYSE, that was commodities. But if you ever saw the original Wall Street movie with Michael Douglas and Charlie Sheen, I'm actually in that scene where they're trading Blue Star Airlines.
Really?
Yes.
I'm going to have to rewatch now.
Yeah, you will. You'll see me. I'm really short. So it's sort of maybe you'll get the sense of it. And we were there. It was a guy named Lefty Lewis, was a market maker. And this guy, Larry Regrano, was the guy who had the Blue Star Airlines order. And we were in the back sort of screaming and yelling. Anyway, I loved what I did. I loved it the minute I got down there. And I said, this is it. I found myself. I found my people. I found my adrenaline, my energy. And so when August came along and it was time for the internship to expire, I was working at a company called Cowan and Company, which no longer exists. It was it maybe have gotten privatized by now. It was taken over by Societe Generale and a couple other big takeovers, but it was a big company at the time. I asked if I could have a job, a real job, and they loved me. My personality was perfect for the floor. I was good with numbers. I was good with people. I could handle the energy and the chaos and the madness. And they hired me as a option clerk. And back in the old days, every booth, right? So the booth, you'll be able to see them. The booths are still there, but the booths were really literally with 100 sets of phones, right? And a lot of buy pads and sell pads, and you'd have 4 or 5 clerks staring at the phones. Each phone tree had about 30 or 40 phone lines on it, and it was the old push button phones. The phone would ring, you'd hit a little square that was lit up, you'd pick up the phone, you'd say, what do you want? They would give you an order, buy 500 shares of IBM at $123, sell 300 shares, cancel 200 shares, buy 1,000, cost 1,000, sell 500. I mean, it was that kind of crazy madness. And I just loved it. I thrived on, I was running 2 phones, screaming and yelling. It was spectacular. And the ultimate job when you get to Wall Street is to become a broker, right? Early in 1903, 1,356 seats were established, kind of like a taxi medallion. 1,364 seats were established on the floor of the exchange. That gave you the right to trade stock, right? And you either had to buy one or you had to be sponsored by a company to run one, and that made you a broker. But on the way to becoming a broker, there was no training for the job. You had to do teletypist, be a squad, be a clerk, be a runner. You had to basically establish yourself as a trustworthy soul, somebody who was good with numbers, people could count on you. And that was the training. And it usually took 10, 11, 12 years to go from the bottom of the rung all the way to the top, which was a broker, which is a very prestigious job. Not always the biggest money in the world. It's not the multi-million dollar payouts that people think. That's sort of more of the upstairs brokerage people. But the floor, it's called the street for a reason. Most people down on the street don't have huge educations, at least historically, right? They're usually a family-owned businesses. At the time, I had an undergraduate degree, and I had about 3/4 of a master's degree I got from Baruch in MBA, but I never finished. I had more education than a lot of the guys there because a lot of them started as youngsters there as a family-owned business, or they came on and they started as a squad and moved their way up. So I got it. And it was also the greatest job in the world. So nobody ever wanted to give it up. The only way you gave it up was either getting fired for doing something fucked up or dying. And so it usually took 12, 13 years to get a seat. I got very lucky because one guy died, one guy got fired, one guy retired. And I got moved up from option clerk, retail clerk, institutional clerk, and broker. I just went up my, one of my new employees just signed the book. I'll tell you a little of that story later. You actually sign, when you become a broker, you sign the book, kind of like Santa Claus's book. The book that you sign goes back to J.P. Morgan and John D. Rockefeller from 1885. It's that crazy of a book. And my name was on July 7th, 1988 is when I signed the book. So I'd been there for 2.5 years, and I got a seat on the stock exchange. So, and that was the beginning of a long career, but I'll let you talk.
Okay. So July 7th, 1988. So that's like right after the crash, right?
I was a clerk during the crash of 87.
Talk about that.
I was a retail clerk. So there are different kinds of clerks. People who do option business are what you call option layoff business. You guys trade options, I presume?
Yeah.
Or do you trade equities? You're more option guys, right? Or both?
Options and futures, whatever.
Okay, fine. So anyway, for an equity firm on the floor of the NYSE, which is an equity trading floor, we do what's called option layoff business. So we basically will trade equities to offset positions that the market makers have in the option markets. They need to buy. Let's say a market maker is making huge sales on some calls or something. They need to buy common stock to hedge themselves, right? Do you understand what I mean? Right? Market makers need to offset. They don't want to be nakedly long or short. So they hedge themselves, and they hedge using equities. Okay. So I was an option layoff clerk. Then I became a retail clerk. That's just back in the old days. That was before young people were trading the markets, really. Retails were basically mutual funds and young and retail traders, 401k business, small orders, 500 shares, 1,000, 10,000, and 100,000 share orders. And then you had institutional clerks that were big, right? You were trading for high wealth people and for institutions. So on the crash of 1987, I was a retail clerk, and it was wild. I mean, till this day, I've traded through the crash of 87, the bubble of 2000, the great financial crisis of 07, 08, and COVID. I've been there for the four, and I don't use the word crash lightly. We've had a lot of sell-offs, consolidation, pullbacks, but I think we've only really had 4 crashes in my lifetime. Obviously, 1929 was a crash as well. But that was, look, maybe it was my perspective as a young clerk. Maybe it was the fact that we were still in open outcry. Everything was done on paper. Maybe the market was trading at, the market closed down 606 points, which was 37% of the market's value, right? Even in COVID, when we closed down this 10,800 points over those few weeks during COVID, I don't remember what percent it was, 20 or whatever.
20-ish.
So the crash of 87 percentage-wise was still the largest crash in history. And I remember stocks being down 60, 70, $150 stocks down 60, $70. I was trading a company called Digital Equipment, one of the first computer makers. But it was madness. It was chaos. It felt like the world was coming to an end. And yet, for me, I have fond memories of it because, we ended the day with very few errors. We had customers that we took care of in a big way. It was scary and devastating in the way that you saw a lot of people go out of business that day and people were jumping out of windows. I know that. But, as a clerk or somebody who's in the, boots on the ground, kind of in the midst of the fire, a good day during something like that is when you did your job, you didn't have any errors and nobody was disappointed in the job you did. Right. And you were transparent and honest. And so, yeah, it was amazing. It was an amazing day, as were the days that followed. But still, from the hysteria point of view, right? Literally, like, dogs and cats living together, crazy ass shit going on. That was probably the most wild crash I've ever traded through.
That's nuts. Okay, so the reason I ask you is because it seems like you got into the market in a really interesting time, right? You said that you started in 85 and you had this crazy run up into 87. You had this 30% crash in the market. And then following that is when you become a broker and you have another crazy run leading into the 90s, right? The dot-com bubble. You see these cycles, right? Where obviously the market starts to go nuts and it seems like it's easy money, right? And that's when everyone starts to pour in, right? That's when the retail traders start to get interested. That's what happened in 2020, right? When you have the market absolutely ripping, 2021 comes, GME starts to squeeze, AMC starts to squeeze. Everybody wants a piece of the action, right? Inevitably, you get the pullback, right? Whether it's 87, whether it's the COVID crash, whether it's what we saw last year. And you look around and significantly less people are left, right? Many people have headed for the exits once things stopped being so easy, right? The only people who are left are the people who actually, like you said, really do love this, right? They're here because they actually love the game.
And those who have done the homework. Sorry to interrupt you.
It's a great point. Those who have done the homework. What would you say to the people who are still around here after, coming into the market? And like you said, such a high percentage, 80, 90% of the people who got involved in some of these meme squeezes winded up losing money. Those people that are still here and are still hungry to learn and still want to participate, just like there were people after 87, just like there were people after .com, just like there were people after the great financial crisis. What would you say to those folks who are still around and still have the passion for this and still want to learn the ropes, like you said before, and really learn the right way to do this?
I appreciate it. It's a really good question. I think it's important for me to note, though, that the participants in the market today, those who have hopped on board and are those who fulfill that description that you just talked about, are way different kinds of people, way different kind of a generation than the people that were around hopping on board after 1987. You have to realize back in those days, people's monies was more managed money. There was not 40 million day traders trading the market. Right? People who were in the market were in the market mostly due to a mutual fund from a job, a 401k from a job, or they had some money and they grew up with money and their money was being managed by brokers. There were millions of brokers who were managing money. But so each one of these phenomenon represent a different kind of the population, right? A different mindset, a different maturity as far as interest in the market, right? So people used to give, if they had money, they gave it to somebody to manage that money and they hopped on board. And that was a big part of the generation that happened after 87. They saw the opportunity, but it was nothing like what transpired in 2000. That was a whole nother thing. You had an influx of younger people, .com, a lot of the big crazy money that happened out in California with chips and whatnot. Then obviously you saw 2007, and I've spoken about this a number of times, that each one of these massive crises have different components that made them up, right? All crashes are not done for the same reasons. The ride into them was often different, although at each time we basically, if you watch them all, the rise up to 87 and the fall, the rise up to 2000, the fall, if you go back to February 12th, 2020, the market was trading at record highs across all indices. Okay, the consumer was in great shape. Unemployment was at a reasonable level. The bank's balance sheets. It took us 9 years plus to get back to even after the financial crisis, and they threw $1 billion, the $1 trillion, $800 billion at the market as a stimulus back then. However, on February 12th, 2020, it has, and it's recorded, this is fact, that every indices from the Russell, the Dow, the S&P, and the NASDAQ were trading at record highs. Banks' balance sheets were at a record level. Consumer was in great shape. And then obviously the unfolding of COVID, the reality of it all, and everything that led up to that. And then the next 6 weeks culminating in the crash of March 23rd, 2020. So the components that make up each crash are different. And the participants in each one of these experiences and generations has been different. It's different, and it's where they came from, often color of their skin, often their financial situation, also their level of education. I mean, what I find extraordinary about what I call the democratization of the trading community, suddenly everybody, look, if it was up to me, anybody, should have been allowed to be trading this market forever and ever and ever and ever. But that wasn't the nature of the business at all. As I said, it was more a barrier to entry situation. It was exclusive, not inclusive, right? That's why I'm doing what I'm doing, is because suddenly I'm seeing those walls come down. And what an amazing opportunity. This is an opportunity to connect people to opportunity. Okay. The fact is, and that's why I'm so vigilant about what I do, why I'm so passionate about what I do is, God damn it, it's about time this friggin' happened. Everybody should have a chance to create generational wealth and make some money in the market. All that being said, it's a roundabout way to answer your question. But what I would have said to the people who hopped on board in 87 and to 2000 and 2007 is a lot different than what I would say to the people today, okay, who hopped on board at COVID. The circumstances are different. The world is a different place. We as consumers, as a generation, are different. The global interrelationships of people are different. The place of people of color and women in finance is a completely different place. And so basically what I would love to say to them is, this isn't a get rich quick scheme. I know a lot of people got hurt. You should have been given the playbook when you hopped on board. And I say this over and over again to the people at Publix, to the people at Robinhood, to the people at Webull. And I'll use the analogy I often use is, if I want to become a pilot, I don't go to Teterboro Airport, hand the guy a 50, ask me to give him the keys to a Piper Cub that's out on the driveway there. I hop in and take off and hope it works out well, right? Same thing about trading. What I do is, if I want to be a pilot, I log in 300 friggin' hours of course. I take it. I meet a teacher. I do about 185 hours of flying with an instructor before I ever even consider flying from New Jersey to New York. Same thing with money. Money's a funny thing, right? We get emotional about it. We get passionate about it. And sometimes we let all our judgment fly to the friggin' wind, right? And so that's a playbook that people should have been given before they opened these doors. Before you were invited to the party, you should have been given a flyer saying, okay, you're all welcome to this party now. Well, this are the fucking rules, right? You win money, you lose money. It's not a get rich quick scheme. There are rules and discipline and consistency to make this work for you. You're out here trying to hit singles and doubles and not hit home runs. You're going to be lucky for $1 and wrong for $50. Money does funny things to people, right? It's not a matter of how much money you make, it's how much you keep. There are two kinds of gamblers. And people always call it gambling. It's only gambling. You know, what happens if you go to Vegas? Why does Vegas exist? Because the bank always wins. The probability is in the banker's hands, right? What we try and do, and what people who have gotten the playbook and people who hop on board my team know, that we try to put the probability in your favor that you're going to make money more times than you're going to lose. But that takes having a playbook, seeing the movie, and knowing the rules of the game. So what I would say is, I hope you ended up making money in that craziness. I know most of you probably didn't. A lot of you are scarred by it, and you hate everybody, and you blame the suits, and you call me an old man, and you tell me to go fuck myself because I didn't give you the playbook, but you never called me. I'm hoping, and this is why I do what I do now in such a broad way. I have 10 different TV shows. I do podcasts everywhere. I travel around the world to try and get out a message. I've had an amazing success growing my Instagram, my TikTok, and my Twitter. I have 160,000. I mean, a year ago, I had 8,000 followers. Now I have 162,000. You know, my engagement is 250,000 for every time I post something. You know, so I mean, people recognize me on the street now. It's frigging crazy. You know, I mean, everybody from, you know, high school kids, you know, on a plane, wherever it is. I would say is that this is an amazing opportunity if you know how to use it, right? Sometimes doors are open for us, but we don't know how to walk through them. We don't know the stages to take. You know, we wish and want something without really pulling back and going, okay, well, how do I get this and how do I keep it? Right? Because money is a very flighting thing. I can be up $1,000, you know, at 11 o'clock on a trade, and I think I've got diamond hands, and I don't use stop orders, and I put all my chips in the book, and the next thing you know, I'm down $4,000. I was at the ATM 4 times, and I can't afford my friggin' rent. You know, I always use the analogy about different kinds of people who've gambled. There's a disciplined gambler who goes to Vegas with $1,000, and he makes a deal with himself. If I win 1,000, I'm going home. I'm going to Ruth Chris, get a nice steak, go to the beach with my family and have a Coco Loco and chill. Or there's the guy who has no discipline at all. He goes, he bets, he has 1,000 with him. He's up 3 or 4 grand. He thinks he's got diamond hands. He doubles his bets and whatnot. By the end of the night, he's been to the ATM 4 times. He was up 4 grand. Now he's down 8 grand. And he's sitting out on the corner, you know, drinking Hennessy and smoking Lucky Strikes. Same thing with stock trading. Right? People turn winning days into losing days. They turn winning trades into losing trades, right? People don't know the rules about stop orders, the amazing gift that the stock market gives you. So I would say, and look, and then there are a lot of bad actors in the space. You know, recently we saw that there's a group on, you know, there are a lot of pump and dumpers out there. So I'm sure you've seen the the Wolf of Wall Street movie. I know him and he's a bad guy, and we don't need to discuss him. But at the end of the day, there are still people doing that. There was a company called Atlas, I don't know. They had a Twitter space, a guy named Zach, who just him and his 5 buddies got indicted for $100 million pump and dump on Twitter spaces, right? So there are still people doing it. And if people don't know that, there are people out there who will bring you into their community and make it feel like they're your best friend. And they'll go out and buy chunks of stock. And then they'll tell their 600,000 people on TikTok or Discord that they love, Blue Star Airlines. And while you're out there going to buy it, they're out there selling it, right? And then they get indicted for $100 million. I'll tell you a curious story. I went on the Twitter space that was the home of those guys. The guy Zach and this other guy, I don't even know their name. I got invited to go on there because people know I run a trading academy, and one of the not crooked guys in the group invited me to talk about, we do these live free webinars where we teach new traders how to trade. And we went on for about an hour. We invited everybody to a live free webinar. We were doing giveaways. And a couple of days after we went, me and my partner, David Green, who's really my teacher and my mentor, I'm sort of the moderator, motivator in chief. I got emails from those guys saying, you know what? You absolutely bring no value. We don't give a shit about your experience. Please never come back to our Twitter space. We're obviously doing way better than you. Screw you. Fuck you. And I was like, my feelings were hurt because, you know, I know my motivation is pretty good. And then sure as shit, I reached out to the person who invited us to the space. And she was like, wow, that's kind of weird. I don't get that. And then the next morning, she sent me the blog when it came out on the Wall Street Journal that Zach got indicted for $100 million pump and dump. So I say all this to say that there is education out there. You can get it from me if you want and my team. the greatest defense against a rug pull or a scam or being taken advantage of by the bad actors in the space is education as opposed to advice, right? I'm about to do a podcast next week about that, right? Advice, there's good people, there are good advisors out there, but young retail traders are not giving their money to advisors. They want to put their feet in the fire. They want to get their hands dirty, right? They want to feel what it's like to win and to lose. I've won and I've lost, and winning is much more fun. Trust me. Okay. You know that stupid line from Jordan Belfort, right? I've been rich and I've been poor, and being rich is a lot better. Anyway, at the end of the day, the best defense against any of that is to learn the game. One of my mottos is I give you a toolbox, I fill it with tools, things that we've learned over these decades of trading that are basically the playbook to successful trading. We don't win all the time, but when we lose, we identify our risk on the downside. I'm willing to bet $50 to make 200, but I'm not willing to risk 200 to make 50. So what I do is I set up parameters around day trading, and the stock market gives you those opportunities. So it's a long answer to the question, what would I say to these young people who have been burnt, to invite them back and welcome them back to somewhere where there is an opportunity to make some money, learn a skill, have some disposable income, perhaps have a career, perhaps make a shitload of money trading. A lot of people go from zero to heroes day trading because they learned the game, but people who bet on hype and hope and FOMO, right, or Uncle Henry on the internet telling them what to buy, or listening to Reddit or Wall Street Bets or all those other guys, you may win once or twice, but at the end of the day, there won't be consistency to that. It's discipline and consistency. So what I would say to them is, learn the rules, get the playbook, call me. I'm happy to give it to you. Find a coach or a mentor. I do that too, because there's nothing more fun. You guys have traded, obviously, right? Tell me, is there anything more fun than getting into a stock for the right reasons and making some money and putting in a stop order, taking some profits when you can, right? And end the day. You got a goal of $200 to win for the day. You got the $200, turn the machine off and go to the beach, smoke a blunt and have some fun. I mean, there's nothing better, right?
Nothing better.
There's nothing better. There's nothing worse than being up $500 at noon, thinking you're the greatest friggin' trader in the world, that you got diamond hands. You get big, you get sloppy, and you're down $2,000 at the end of the day, and you're sick to your friggin' stomach because you turned a winning day into a losing day. There's nothing worse feeling. Those are the two paradoxes, right? And it comes with education.
It's the only job in the world where you can leave with less money than you came with, right? Only job in the world.
100%. We're talking trading versus investing. We can talk about investing later.
Yeah, no, that's actually a good topic. And I had a question at the top of mind earlier in the show, because Noah was kind of running through, and you were obviously talking about, okay, I've been through 4 separate crashes. Right now, a lot of what we see, and we've been talking about this on almost every episode that we've done, is the macro environment and the Fed and rising interest rates. And in your personal opinion, I'd like you to speak to the young investors. A lot of that, what I call noise, I feel is noise. And I try, when I think about my investment strategies and I think about my investment horizon, and I have, 40 plus, 50 plus years until I retire. What is your advice for those who are looking to get into the market, looking to invest, but are kind of scared or taking a back seat at the moment because of all of the FUD that you hear about the Fed and about the macro and about the impending recession? What is your take on that? As like, what should the mindset be?
Okay. So look, I'll be really straight up with you, and I can't really advise you what to do, but I can tell you what I've learned through my experience, that every one of those crashes, 87, 2000, 07, and COVID, net were way better buying opportunities than selling opportunities. Those people who made a shitload of money over the last 20, 30 years were people who bought when everyone else was selling. Have you ever seen the movie Caddyshack?
Yeah.
Okay, don't you know when he's on the golf course and he's got his phone, Rodney Dangerfield, and it says, everyone's selling, then buy. But everyone's buying, then sell. At the end of the day, look, if you have a leather jacket that you really love and you've been looking at it at Macy's for the last 4 months and it's $1,000, you can't afford it, right? And it suddenly goes down to 700. You still can't afford it. Suddenly, for whatever reason, Macy's is going up against Gap, or there's some whatever the macro story is. Suddenly, your jacket goes on sale, and you want it, and you know that if you buy it, it's going to be something you're going to have for a long time, right? It's something that's important to you. You don't go run for the hills. You go and buy the friggin' jacket on sale, 70% off for $300. Because you like the story, you like the leather, you like the product, right? And you know you're going to have it for 20 or 30 years, right? Same thing about stocks. At the end of the day, historically, stocks do nothing but go up over time. The S&P 500, the Dow, the NASDAQ, although it's a shorter index than Dow and S&P, okay, living one, historically over time, markets go up. Historically, over time, every one of these crashes have been a buying opportunity, then it's better buying opportunity than a selling opportunity. I get that everybody's scared. First of all, let's break it down. Investing is a long-term strategy, right? I'm not investing today and taking profits in 2 weeks. I'm investing for the long haul. And I know one of my most fun videos that I did recently for my Einstein Elementary, which has gone viral, 250,000 viral the other day on Instagram that I posted it, is where I'm bleeped because I'm not allowed to recommend anything. But, there's a great line that if at the age of 18, you put $250 into some indice every month till you're 60, you'll have $1.8 million, right? At the end of the day, as a young person investing in the market, find something you love, find a company that's making money, okay? Find a story that you like for the long haul. Look at companies with good long-term guidance, things that you're a consumer of, things that you're loyal to and you love, right? And look at the long game, not the Kathy Woods long game. Kathy Woods has a long game because everything she buys goes down. I want you to be a long-term player in the game as a younger generation than me, because over time stocks do go up, and that should be your long-term strategy. Find stocks that make money, companies you like, what they do, you like the story, and there's plenty of information out there to find out all about that. As far as trading goes, okay, I have no opinion on stocks on a day-to-day basis as trading. I try to think as little as possible. Okay, the bottom line is I am only going to get myself involved in and wrapped up in stories that are going to put money in my pocket. What the Fed's going to do, whether there's going to be inflation or not, how many points they're raising or lowering the rate, what's the market going to do with that information, what the earnings are, what the CPI, the PPI, the DUI, the DWI, I don't give a shit what economic information comes out. It's way bigger than me.
Speaking my language, Peter.
First of all, it's way too big for me to figure it out, first of all. Secondly, I think it's irrelevant. Look, the terminology that we use today, think about it. I don't know, maybe it was 8 months ago. A bear market is down 20% from blah, blah, blah. A bull market is up, whatever. We were actually on a Tuesday, the market was down 1,800 points. We hit bear territory at 11 o'clock in the morning. The market reversed, and by 3:30, we were in a bull market. The same fucking day, as per CNBC, again, CNN and Bloomberg and everyone. So the bottom line is a recession involves massive layoffs up until the last few months when they were ranting about recession for the last year, which hasn't happened yet, and I don't think it's going to happen. You cannot use the old rules in post-COVID world. Right? Everybody loves blaming Joe Biden and all the other bullshit, for this for the possible recession and the inflation and all that. In my opinion, it was all a COVID thing. It was the first time in history we had a full economic global shutdown. If we remember clearly what was going on 2.5 years ago, 3 years now, right? The world came to a halt. No one was getting on trains, planes, and automobiles. No one was going to movie theaters or cruise lines. Every company shut down. You were sitting at home, smoking doobs, watching Netflix and getting DoorDash, right? That's what the shit was. Millions of people were fucking dying, okay? So all of that noise, what does FUD stand for?
I don't think it stands for anything.
Oh, what?
I think you should.
No, it does. It does.
Something?
It does?
Yeah. I think you got it.
It means something. What does it mean? FUD.
It means bullshit.
I'm gonna look it up for you. Right now.
Look it up. Anyway, so as a trader, it's all noise. Right? I don't care what the earnings are. I don't care what those numbers are. I don't care about anything except price action and technical analysis.
Fear, uncertainty, and doubt.
Fear, uncertainty, and doubt. Look.
You learn something new every day. Here I am using it. I had no idea what it even means.
I know. It's great. I've never used it, but I've heard it used. At the end of the day, the media loves to catastrophize everything. people love to create drama. We know it in our spiritual life, our sexual life, our relationships, and money. Right? It's just we're catastrophists. It's the worst day ever in history. It's the greatest day ever in history. That was the worst month. Oh my God, since 19. I mean, why do we need everything to be in exemplatives? I don't even know if that's a fucking word. I just made it up. Okay. Or this level of catastrophizing, right? At the end of the day, as a trader, it's a particular skill. That means I want to start my day and end my day making a little bit of green. So I'm green at the end of the day, the week's a month. If I think and have an opinion about something, right, it's like, okay, I heard the earnings are going to be good, so I'm going to go along the earnings, and then the earnings were good. However, we don't know what the big whales were doing. Maybe they're doing options. Maybe some other shit's going on. The stock has good earnings, and it goes down $30. And I'm sitting there holding Herman. That makes no sense. I thought the CPI was going to do better. It did do better, but it wasn't as good as the expectations. So it ended up going down 1,000 points. I had the right idea, but I got my ass kicked and I blew up my trading account, right? All of these things. Walmart missed, beat on earnings and revenues, but missed on guidance, and the stock went down $30. Okay, so I was right about my call and I was wrong about the action. You know what I'm saying? So as a trader, it's all noise. It's all chatter. That is absolutely not my fucking business. It's not my business. It's just to confuse people and get people sucked into some bullshit. I don't get it. And I've gone on CNBC and I've gone on everybody going, guys and girls, you are not doing a service to the young. If you're not teaching the young retail trader and you're giving them all these big words, recession, death cross, yield curve inversion. I mean, the other day they went 6-8 months ago, they went on this inverse yield curve thing, which is a thing. Okay. And it happened a few years ago, but it happened over time and it lasted a while. And it did mean that the shit was hitting the fan. The aliens were taking over and everything was going batshit crazy and it affected the market. Well, suddenly they pulled that term out of the fucking mold basement and used it again. The inverse yield curve lasted for 37 minutes. And CNBC and CNN and Bloomberg were touting it like the end of the world, dogs and cats living together. The shit was over. Right? So I say all this to say that it's all irrelevant. Recession, inflation, as a trader, it's all CPI, PPI, it's all irrelevant as a trader. All I care about is price action and risk management. All I care about is reactive trading, not proactive trading. That's all. Okay. And so what can I say?
We need to make everybody on FinSwit listen to that part of the podcast, that rant. We're going to clip it. We're going to put it on Twitter.
Please
and
do.
That should be barrier to entry before you start trading.
You're going to hurt a lot of people's feelings with that one, Peter.
I say it to everybody all the time because they'll say, well, I thought it couldn't go any higher. I think it can't go any lower. I thought the CPI was better. Why didn't it go? I mean, thinking is a mistake. Having an opinion is a mistake. As a trader, I've watched this market. I've seen the movie before. The mixed signals, the cross currents, the giant whales trading, the option layoff stuff, the market. You have to realize too that a lot of the big investors in a market that went through 2022 the way it did, what you ended up finding was that a lot of the old buy and hold institutional investors, investment houses, right? The big guys who used to buy and hold using fundamental analysis for their strategy. They realize that if they can't go back to their customers in 2022 with a buy and hold strategy because they're down 38% for the year. Who the fuck wants to hear that? They'll get redemptions up the ass. So what they started to do was trade the market. That was the only way to make money in 2022, right? Because stocks went up $50 and then they went down $30. And then we up $70, right? We had stock Shopify go from 1,700 to 170. Netflix got caught Bill Ackman by the fucking gonads. He lost $428 million, one of the greatest traders of all time, because he thought Netflix was going to go up at $720. His purchase sucked and his sales sucked because he sold it at the bottom. Okay, so the bottom line is the dynamic of the market has changed. I don't use the same rules as driving as they used in the 20s. Right? Things change. I don't use the same rules as trading because the market dynamic was different. I don't use the same way I deal with a relationship with a girl when I'm 18 or when I'm 40. Everything changes. You've got to pivot. You've got to be freestyle. Right? At the end of the day, today's market is different than. And I went on a rant maybe 6 months ago saying this is not your grandfather's stock market. And it's not. It is a market where the earnings can be good, the guidance can be good, and the stock can go down 50 fucking dollars. Right? I've watched it happen. Snowflake, whatever that company is, SNOW. The earnings were coming out after the close. Everybody bought the crap. It was up $50 because a lot of the analysts were saying the earnings are going to be good. It's all good. It was one of those stocks that got memeified during COVID too. Earnings came out, they were good, and the stock went down $75 and $120 over the next 2 days. Okay, so do I care why? No, because caring why doesn't put money in my pocket. Do I position myself to wait till the earnings come out, not buy it up $50 and then get my ass handed to me? Do I wait until all the crazy people, I call it gorillas in pajamas hitting buttons, right? Those are the idiots who have no edge and they're just trading on hope, hype, and FOMO. Do I let the earnings come out and let the information happen? Okay, and then I let price action and technical analysis determine my entry point, my exit point. I make 50 cents, $1, and $2. I'm out of the trade. I use a stop order on every trade I do. If I'm up 50 cents, I sell half my position. I move my stop up so I cannot lose money on the trade. I will never turn a winning trade into a losing trade. If I'm up 1,000, that's my goal for the day. I turn the machine off, go home. If I have 3 losing trades, I turn the machine and go home. Doesn't make me a loser. Doesn't make me a bad trader. I'm having a bad day. I'll come back from a bad day. I'll come back from a bad week. I have people call me and asking me, can you analyze my trading strategy? And I'm going, well, how you doing? Well, I'm batting 80%. I said, so you must be making money. Well, no, I'm down $8,000. I said, well, how's that possible? Well, I had 4 winning trades at $100 a piece. And then my 5th trade, I lost $8,000. I said, well, that's not a sustainable strategy. Well, why'd you do that? Well, I thought the stock couldn't go any lower. I thought it couldn't go any higher. Did you use a stop order? No, I used a mental stop order. What's a mental stop order? This market is trading 1,000 points intervals over a 20-minute period. You're using a mental stop order. You're in a big position. You're at $50. You don't put a stop order at 49.5. It goes to 48. You buy more. You go to 43. You buy more. You're sick to your stomach. It goes to 40. You puke them out, and it goes right back to 50. I've seen it a million times. So anyway, did I make my point? You identify. I can see you. God. I can see you all identify.
No, not me. No, I'm kidding. Yeah, a million times, man.
Everybody's done
That's the story. I mean, no, yeah.
No, yeah. No, yeah. I like that. Yeah. No, yeah.
Yeah, I mean, whatever, man. Whatever.
It's honestly, it's so funny that you say it like that, because it really is. It's different, but it's not, right? Like it's the same thing. It's the same, I guess, like psychology that gets people every time, right? Like I feel like those psychological, like, and we talked about this the other week, like there's not going to be one magic strategy that you're going to have, that you're never going to have losers. You're just going to win every single time.
Right.
It doesn't necessarily matter what strategy you use. To some degree, it has to, not be stupid, and it has to make sense. But like, the strategy is not it. It's more so that the psychology behind, like you said, being able to be disciplined with whatever strategy you're using, right? Whether you're using moving averages, Fibonacci retracements, Bollinger Bands, it doesn't matter what it is. It's that discipline to, like you said, cut your losing trades, not let your green trades go red, take profits when they're there, and know when to turn it off, right? And I feel like that's something that you hit on that's not talked about enough, right? And especially nowadays in the environment, it's like, if you're up $1,000, you should finish the day up $2,000, right? If you're up $2,000, you should finish the day up $4,000, right? There's never a good enough, right? It's always more and more and more. And I think you make a really good point. If you walk in and you hit that first trade and you hit your daily goal, like, what are you doing sitting there through the slow lunchtime price action trying to grind out another win?
Not going to get better. That's the best it's going to get.
You touched on a lot of great points.
You know what? It's funny. I just posted a video day before yesterday. Go on Instagram and watch it. The 5 mistakes that unsuccessful day traders make. And they're all the same. All the mistakes that unsuccessful day traders make are all the same. They don't have a plan on how much they want to make for the day. They average into bad trades. They don't use stop orders. They don't know when to stop trading, and they don't when they're winning, and they don't know how to stop trading when they're losing. Okay? That's the bottom line. They don't get enough out of their winners, and they are not willing to accept the loss, so they stay in their losers too long. As I said, I'm willing to bet 50 to make 200, but I'm not willing to bet 200 to make 50, right? It's a probability game. It's all a probability game. And the mistakes that unsuccessful traders make are all the same. And the discipline that goes into be a successful trader are all the same. Have a stop order on every order. Never average into a trade. If I'm averaging into a trade, I'm in a bad trade. I'm in a bad trade. It's the bottom line. This market takes no prisoners. It's crazy, right? These stock, you guys have been, I don't know if you know this, but back in the 70s and 80s, a big day on the stock market was the market was up 3 points, right? You never had intraday reversals of thousands of points. You never had a market today hitting the really beautiful high today. Did you guys trade today?
Yeah.
2:00, the market was the high of the day, and it proceeded to go down 25 handles. And I was short up to wazoo from 2:00 to 4:00. So I made a shitload of money, but that's because I know what I know. Okay. At the end of the day, everyone goes, oh yeah, wow, 2:00, market's rallying. The trend is on the way up. You know what? At the end of the day, you could have made money on the long side, on the short side. Can you imagine the gift that the stock market gives you to have a stop order? The first thing there are two different kinds of traders. There's a trader who sits down at his machine in the morning and he's, how much money am I going to make today? And he's a loser. And then you're going to have the person that says, how much am I willing to lose today? Okay. Let me identify my downside risk. Okay. You need to figure out, first of all, you got to stop losing money. Then you have to learn how to start making money. The stock market gave us this incredible gift of a stop order. What an amazing, can you imagine? Look, if there were no stop orders, this would be Cowboys and Indians, man, right? This would be Cowboys and Indians, right? Who's got bigger pockets? Who can move the shit up and down and fuck over the little guy, right? When I told you I traded commodities as a kid in 1980, and I was trading orange juice futures, and I didn't know what the fuck I was doing. I built the strategy in my head, and I was sure it was going to work. And I turned $3,000 into $45,000, okay, trading orange juice futures. There's a thing, I don't know if you've ever traded commodities, but there's a thing called down limit. Okay, down limit means that if it goes down a certain percentage, it's kind of like a circuit breaker on the stock exchange. When it goes down a certain amount, when they've sold the contracts down 10%, it stops trading. You can't get in, you can't get out. And it can open down limit day 2 because the big whales are selling it. When they want out, they get out. They're going to do that. And it can go, I ended up in a 4-day down limit. By the time I was able to get out, because I wasn't a big enough of a guy, my $45,000 was worth $1,675. Okay, so the market is a crazy thing. So imagine how wonderful it is. They give us that opportunity, like if I to be able to protect my downside risk. That's a gift if you use it. You have no idea how many thousands of people come on into our academy and they go, I've never used a stop order in my life. Why didn't you use a stop order? Somebody on the internet told me that the market maker can see my stop order and then he fucks me over. He sells the stock down to my stop order. He takes me out and he runs the stock up. I've been working with market makers for 137 years. Trust me, the market makers are they're trading billions of dollars a day. They have no interest in fucking with your 1,000 shares, 10,000 shares, or 50,000 shares. They're way too busy for that. But that's the insanity that people are told. So they use mental stop orders. What's the mental stop order? Well, I buy it at 50. I hope it doesn't go to 49. If it goes to 51, oh my God, I'm in a great trade. They don't take a profit when you're up. They don't accept a loss when they're down, and they're in trouble, right? That's the kind of the crazy part. But your points have been your points are great. That there is a way to navigate this market successfully. Okay. It's not easy, but it's actually simple. And you talked about it, the psychology. When we teach our course and we mentor and coach our students, we tell them that the most important thing we will teach to you is the psychology of trading. It is anybody can hit a buy button or a sell button. It's what you do when you get in the trade that counts. Okay. And you have 2 little people sitting on your shoulders. Right, one person is your diamond hands. Oh my God, you're a genius. You're doing so well. Let's buy. Let's average into it on the way up and the way down. Let's not take profits. It's going to the moon. Or the other person who just says to you, "Oh my God, I'm up 20 cents on this trade. Let me get out." But if I'm up 20 cents, I'm willing to get out, and I'm down $4. I'm staying in the trade. It's the psychology of trading that is the hardest thing to get, because our human nature is against us when you're doing this kind of thing. It happens if you're trading blackjack, if you're trading commodities, if you're doing any number of things, right? It's like, don't get high on your own supply, right? I mean, it's just the bottom line is you need to be disciplined and consistent to be a successful trader. You need to be willing to take 100, 100, 100, 100. And then if you're losing, you only lose 50, 50, 50. At the end of the day, you're net up to 50. And if you get the most out of your winners by using trailing stops, I hope you guys know what those are, or bracket orders, whatever you do, you get the most out of your winners. You give yourself a little cushion for the trades that don't work, because not every trade works. We have losing trades. We have losing days. Sometimes it's just the cards aren't in your favor. The planets aren't aligned. The market's doing that bob and weave roller coaster bullshit. Everything I get in goes against me, but it's not going against me for more than $50 or $100. I can't be successful if I'm up 100, take 100, I'm up 100, take 100, and then I'm down $4,000. It's not sustainable, right? And so people just need, you just got to learn the game.
Peter, you obviously spoke to a bunch of different, really important topics throughout this podcast that I think a lot of people needed to hear. And your background and stories are awesome. It's got me fired up, man. I'm really happy that we finally got you on and that we got the chance to have this conversation. And you joined us late too, which I really appreciate. It's after midnight now.
Oh, is it?
So you're the man, Peter. You're the man.
Oh boy.
You can tell. I love what I do. At the end of the day, I want everyone to be successful because I know how good it feels. Some people don't give a shit about how other people feel. There's nothing better. I have testimonials of people who come and work who have spent $30,000 on online trading academy and never learned how to trade, or spent tons of money on this. Or we have a guy named Robert Silverman who's become one of our greatest students. Wealthy guy, trades. He's a real estate agent from out west, and he was did not know how to trade, but he had a gambling sensibility, and he was losing 25, 30, 40,000 a month. And he kept going back to the well. He would just buy a stock because he thought it was going to go up. Right. And then, and if he started to make money, he got all excited, he'd get out and he would just stay on his losers also. And until he found me on Instagram, and we did a masterclass, and he hopped on board, and he goes, oh my God, these guys are going to teach me how to stop losing money. Like, I mean, his life was crumbling, but he kept going back. The insanity, right? We know the definition of insanity. Going back, doing the same thing over and over, expecting a different results. Most people do that, right? And they're willing to lose. They don't tell too many people about it. They're not, I know there's loss porn, but people do post some weird shit on social media. But at the end of the day, those people aren't posting their stories on social media, right? About, I went back there and I lost again, and I lost again. Why is this happening to me? Why are those guys are out to get me? Those suits, that Einstein guy's fucking me over. They've got the plan. They're out to get me. The specialists are fucking me. I mean, all that kind of bullshit. At the end of the day, we have people come and go, I stopped losing money. I shrunk down my size. I started using stop orders. I started small. I was trading 100 shares, making 100 a day, 500 a week, 2,000 a month. Oh my God, I was losing 30 a month. Now, for the first month, I made $2,000. That's great. I can take my family out to dinner. We can have some fun. I have a couple of dollars in the bank. How great is that? And then month 2, okay, I got a little confidence. I get the game. I know what the trades are. I know what a trend trade is. I can use a trailing stop in a trend trade. I can get some good stuff out of my winners, get a little extra. I can save the last 25% of my trade until the trend breaks, and I can make $300-400 on that trade. That's incredible. Month 2, I'm up $4,000, and then I can go back to that crazy size I was willing to lose back in the day. At the end of the day, that's a reality. It is learnable. It's scalable, right? Sometimes you're sitting around not doing anything because hope and FOMO are not strategies to trade. You only trade when it sets up, and you trade everyone that sets up. You can't cherry pick, right? Because you'll end up picking losers and not winners type of thing. I mean, this is trading, guys. It's different than investing, but day trading is making small bits of money over and over again. So I'm green at the end of the day, the week, the month. That's what it is. Nothing further. It's not a popularity contest. It's not about what I think, my opinions, and all that other stuff. It has nothing to do. Those are the most dangerous tools. I thought the stock couldn't go any lower. Think about this. Think about all the people who watched GameStop go from 2 to 483. And I was there the day it happened. It went from 483 down to $151 in one fell swoop before it was technically a buy again. Now think about all the people who started buying. Well, somebody paid 480. It's got to be, it's on sale at 380. I got to buy some. Oh my God, at 280. Oh my God, I'm getting it at a discount. At 180. Oh my God. Well, by the time it got to 180, their account was closed. Right? People who watch Netflix go from 750 to 160. People who watch Shopify go from 1,700 to 170. People who watch Peloton, Rivian, DWAC, Best Buy. Look, people who made this terrible round back in the meme day, who got back, suckered right back into it with Best Buy a couple of months ago. Remember that? It went from 3 to 33 and back to, remember that?
Yeah.
I'll never do that again. No, man, they fucked me over in GameStop. I'm long AMC at $70. I will never get sucked into a meme stock again. And boom, what happened? I bought it at 32 and went straight to fucking 3. Anyway.
It's a deadly cycle.
It is a deadly, but there's a solution. What a wonderful thing. If you ever watch Shark Tank, the deals they like are when you find a problem and you find the solution and you scale it up. It's a beautiful thing. And all of those things are possible with trading and investing too. Don't be scared. Hop on board, but get yourself a teacher.
Absolutely. Yeah, it's great advice. Peter, thank you for joining us. This was a ton of fun. Definitely learned a lot.
Pleasure. I look forward to seeing you guys on the floor. I'm hoping Friday morning works. I'll keep you posted. It should be okay. We'll do the opening bell, show up at 9. No jeans, no cologne. I'm allergic to cologne. As crazy as that may sound.
All right.
You got it.
And we'll have some fun.
Peter, really quick, before you hop off, tell people where they can find you on social media.
Sure, absolutely.
See more of your stuff.
So on Instagram, there is the Einstein of Wall Street, WALLST. It's really easy. It's a verified. There are millions of fake ones. There's only one with a blue check. That's me. I do not have a Telegram account. If somebody reaches out on Telegram, it's a scam. I only have one real Facebook account. The rest are fake, and there are a million of those. I have a website called the Einstein of Wall Street, where there's just millions of podcasts and interviews I've done over the years. On Twitter, I am Einstein O Wall Street, letter O. And I do some stuff on Twitter. Most of my stuff's on Instagram. I'm launching this, a new podcast called Trade Like Einstein on the Money News Network, which is launching next week. I do, what else do? I have Einstein Elementary on TikTok. I have Einstein's Big Board on TikTok. And those are sort of really fun man in the street type of things. Basically, I don't advise people and I don't recommend anything. What I like to do is educate and inspire people to find something they love to do. And they may not be trading. I do a lot of motivational speaking, just about connecting people to opportunity, whether the skills of learning a trade on the stock market may open your eyes to finance. It may open your eyes to advertising, marketing, branding. It may open your eyes to social media, any number of things. The stock market's brand, you'll see it when you come down to the floor, guys. I go to work, whether family members are sick or somebody died or I don't feel well. I go there for me because it's a room of history, right? The main room of the stock exchange from 1903, everybody from Teddy Roosevelt to DJ Khaled walked those halls, right? And the history there is important, right? What goes on there is super significant. And so I like to motivate and inspire people to find something they love to do. It's not my line. If you find something you love to do, you'll never work a day in your life. So I'm easily reachable. You DM me on Instagram, you won't get a robot. I answer every one of my DMs. So you reach out. I will introduce you to me, my platforms, my academy. We do coaching and mentoring. We do all kinds of stuff. So I'm easy to reach. If you look up in the sky, it's like the Batman thing. You'll see Einstein.
Peter, thank you again for joining us, man. Really appreciate it.
My pleasure. Great to see you guys. I'll see you soon.